7:20 now, and this is the very special edition of the Money Show. It is almost end of December. We're in the thick of the wedding season, so that's something that we will be addressing specifically on today's show. We have the best budget wedding destinations lined up for you on the show today, and how to smartly cut down wedding expenses. That is something that we will be discussing with, and of course, wedding related and couples related insurance, how to take loans, etc. That's something we will be touching upon through the course of the show as well. First up, we have Abhishek Bondia. He's the founder at securenow.in. Let's welcome him aboard. Abhishek, hi, good evening, and thank you so much for joining us on the show today. It's definitely our wedding special, a very, very special edition that we've planned out for our viewers. But, you know, if we talk about the basics, I think money is one of the very, very basic factors, components when it comes to having a wedding of your dreams, right? So how should one plan their wedding in terms of finances? If somebody wants to take a loan, firstly tell us if that's a trend that you've been witnessing, increasingly people wanting to borrow money to be able to spend exorbitantly or extravagantly on their weddings?
You know, Karunya, as you know, weddings in India is a big fat affair, and as the inflation, goes higher, people, tend to borrow money to foot the bill for wedding expenses. And yes, you're right. People are borrowing and taking personal loans to meet expenses for weddings.
Kind of offerings out there for people who want to take loans for the wedding purpose?
If you think about loans, it's primarily the personal loans which people take for wedding insurance, for weddings. It is more in the nature of consumption expenditure rather than as an investment or to build an asset. So at a very broad level, it falls under the personal loans category.
What precautions does one have to take before availing this personal loan before you start planning your wedding?
Yeah, I think the most important thing to consider is your ability to repay the loan, right? And I think what one should be very cognizant of is take loans only to the extent that they will be able to repay it in a reasonable way, right, without stretching the finances too much. Other than that, I think from a risk perspective, it is important that people who take the loans, are well covered via insurance. So, God forbid if something happens to them, then the family should not be then left to fend the liabilities that come with the loan.
Typically, is it easy to get a personal loan for the reason of wedding? I mean, are banks and financial organizations open to it? What are the basic eligibility criteria?
So, recently there has been a huge uptake on personal loans. So it is possible to get personal loans, but primarily based upon your income generating capacity. So banks and NBFCs look at your income tax returns, your recent salary slips, and based upon that they would give you a personal loan. They would of course take into account how much can you pay via EMI, and then assess the loan amount. Typically, the loan tenure is around 1 to 2 years is what you'll be able to get.
Abhishek,
in some cases even more.
Right. You were just mentioning about taking insurances for individuals, but is there a wedding insurance along with loans that one can opt for?
Of course. If you look at the amount of expenditure that a person incurs for a wedding, there is a lot at stake, and there's a lot at stake for that one particular day of the wedding. For that, there is wedding insurance available, which can take care of the expenses that would have been foregone had the event been cancelled or some untoward incident happened at the wedding venue.
Okay. All right. And what does a wedding insurance essentially cover? What are the kind of things that fall under the ambit? And typically, how is the costing like?
So, Karunya, the wedding insurance is quite a wide cover. If you look at broadly, there are 4 categories available. One is the cancellation of the event per se, so that if the event does not happen and you forfeit the deposits that you made at the venue, that gets covered. Second, in case some accident happens at the venue, for example, a fire breaks out, or because of a natural disaster, there is material loss to the family's assets, that gets covered. Then third, if because of an incident at the venue, some third party gets hurt or their properties get damaged, they could sue you, and that also gets covered under insurance. Fourth, you can cover any kind of injury due to an accident or even death to your family members that may happen around the wedding date within the wedding insurance. And the beauty of the product is that you may want to buy all 4 extensions, or you may want to buy one or some combination of these 4. So that is up to the family to decide what kind of coverage do they want. You asked about premium. Now, it of course depends upon what covers are you taking, but on the lower end, about 0.5% of the overall sum assured to going up to 2% of the sum assured is the kind of premium range that you would have for wedding insurance.
All right. Okay. What is which kind of plans do you typically suggest to people who come to you for advice?
So, if you look at it, wedding insurance generally falls under the ambit of event insurance. So, just like weddings, you have concerts, you have other events happening all around. So, insurance companies have designed a broader event insurance product which also covers weddings, and there are leading insurers like Oriental Insurance Company or Future Generali, ICICI Lombard. They have these products for event insurance which will cover weddings as well.
Okay. All right. And what precautions or things that one needs to keep in mind when they are subscribing for a wedding insurance? What are the things to watch out?
So the number one thing, Karunya, that I've seen is that people often tend to not disclose their information well, because of which they may face issue at the time of claim. So the most important thing for them is to make sure that their disclosures are complete. They should declare the date of the venue, the full complete address of the venue accurately. They should declare the name of the bride and the groom, the assets that are at risk. The more details that they have, the less pain they will face at the time of claim. So that's the number one thing that one should take precautions for.
When it comes to these personal loans, I just want to revisit that theme, Abhishek. What are the kind of interest that one has to pay for these loans, or are they same across the board for personal loans, or if it is for a wedding, is it slightly higher or lower?
So, personal loan as a category, the rate of interest varies substantially. Actually, and it could go from anywhere between 14 to as high as 25%. A lot depends upon your income, the amount of loan that you are applying for, your CIBIL score. The bank or an NBFC which will give this loan will do a very detailed underwriting of your financial profile and then offer you a certain rate of interest. So that's a pretty extensive process that they would do.
No, Abhishek, we've read about couples going for personal loans to finance their weddings as a very, very hot trend, especially in the Western markets. How big is it in India? I mean, what is the kind of growth you've seen or the trends you've seen?
So it's difficult to put a number, right? Because that kind of data is generally not available when you think about what segment of loans are given specifically for weddings. But it is increasingly a trend where people even take loans, personal loans for foreign travel, and you would often find people going abroad after weddings for their honeymoon and having long trips. So it is becoming increasingly more common for people to fund these expenses via loans.
Often a lot of experts in finance people would say that, it's better not to have a wedding that you cannot afford. But for those who still want to go ahead with it, can you flag off some pros and cons?
No, I think that's a very prudent and conservative measure. You have heard stories of people going bankrupt because they spend too much on weddings. So on a very conservative side, I would certainly say that people should think about their finances in a prudent way. Ultimately, these are consumption expenses. While you live once, you have to keep a balance of what you're consuming versus what you are saving for the future. I think as a broad advice, what I would suggest is that wedding is the start of a journey for you, right? So one should think about allocating only a certain percentage of their wealth, of their future income on that celebration. Rather should invest much more in the future that's going to come. Be it living together in a house, thinking about their family as they go along, or taking better care of their health. I would strongly recommend people to have a more holistic view about their wedding, which is start of a journey and not an end by itself.
Abhishek, we have a viewer query as well. Let's quickly address. It's an email from Melvin Fernandez. He's based out of Mumbai, and he asks, would I be eligible for a personal loan if I am paying EMI on my home loan? I'm looking for a loan for my daughter's wedding. So that's his objective. He wants a loan, but he already has a loan running on his name for his housing loan. So tell us, what would be your suggestion?
So, Melvin would be eligible for a personal loan. It is actually quite common for an individual to have concurrent loans. In a positive way, it actually can help you get a lower rate of interest. So what happens is, when you have an ongoing loan, you start recording a CIBIL score, a credit history with banks. And if your repayment has been okay, you would have a high credit score. So you may get a lower rate of interest if you already have a loan experience with a bank and a positive experience with a bank. In terms of the amount that the person may be eligible to get, would be based upon what is their income and what proportion is already being set aside for the home loan EMI. The bank would consider the remaining amount as their disposable income, and only as a fraction of that they will consider towards a personal loan EMI. So without having the numbers, my advice to Melvin would be to speak to a consultant and just get an analysis done of what their disposable income is. The home loan EMI will get deducted from that, and then the balance amount will be considered towards assessing their eligibility for personal loans.
All right, Abhishek, great chatting with you. Thank you so much for joining us and telling our viewers about the options that they have when planning their wedding in terms of loans as well as insurance, and for addressing the query. With that, we'll slip into a short break, but be back soon with lots more on the Wedding Special lined up for you.